Good evening, everybody. So, why do cowboys like wiener dogs? Because they like getting a long little doggy. All right. Okay, we're going to kind of concentrate again. What has really been working effectively, and probably something that I should have concentrated on more in the past. But if you are in the process of learning candlesticks, again, the bread and butter. Okay, Mo, good. The bread and butter is obviously learning each individual signal. There's only 12 you have to learn. Just visually recognize them and understand what the psychology of each one is. Obviously, a doji's indecision. A big, uh, you're wasting your talent here. That's right. Um, the no, I forgot what I was saying. No, so a big candle obviously is a bullish or bearish candle with lots of decision to it. Indecision signals the inverted hammer, the hanging man, the shooting star, the doji, the harami. So what we want to basically do is take those pieces of information and now kind of put them into a situation where they enhance the probabilities of being in the right place at the right time with one basic premise, which is that they are the reoccurrence of human nature, where they constantly show what the sentiment is time after time. And that's why candlesticks are still relevant after hundreds of years, because human nature, when it comes to investing funds, remains the same. So let's take a quick glance at the markets. Today, the Dow was down 100. A lot of people would look at that as being a kind of a bearish move in the market. Except as a candlestick investor, you can see where the low was today, right smack dab on the T line, and it closed basically as a indecisive trading day. So it wasn't strong selling, even though it was down 100. The other index, the NASDAQ, opened lower, but you can see it was trading well above where it opened on the day, which told you immediately that the sellers weren't there, that once they opened, the buyers were still in place. Kind of the same scenario over here on the S&P 500, but even more so over here in the transportation index. So one very simple rule is that if you see a couple indexes trading up and a couple indexes trading down, it usually means there is no major change of investor sentiment of the current trend. What is the signal in the Dow now? Nothing. Today, the Dow told us it was an indecisive day that did some profit taking. But what is our number one criteria, or what's our final criteria for analyzing a trend? As long as we're above the T line, we can assume we're still in an uptrend. Now, if you add the other aspects, that the NASDAQ was showing bullish signs because it opened here and closed up here. It told you the buyers were still there. And then we could see even over in the transportation index. A lot of people ask, well, why do you use the transportation index? It's not a major index. The transportation index kind of acts as a, what do I say, a precursor that if they're still buying the transportations, that means the underlying analysis is that investors think that the market or the economy is still good and things are going to be shipped or people are going to be moved around. They keep buying the transports. Okay, so what I want to concentrate on is the 2 plus 2. I mean, that's just a very simple, is that an evening star on the NASDAQ? No, what's an evening star, Joel? This is why everybody should know their candlestick signals. An evening star is a big bullish candle, a day of indecision, and the third day opens and closes as a red candle more than halfway down this candle. The fact that they opened this traded higher hasn't created any sort of candlestick reversal signal. Okay, so what we're concentrating on is if we know what the patterns are. So here's your first basic learning process. You want to learn what the signals are telling you, and you want to learn what the patterns are telling you. As we can see, we've got a kind of a big fry pan bottom here on Aqua. That's why we recommended it right here at the breakout level or this breakout level. But what's the simple criteria for a pattern? You've got a fry pan bottom. How long do you stay long? As long as it doesn't close back below the T line, you know the uptrend remains in progress. This is always a good indicator. When they're getting to a breakout level, let's see if I can get close to this. A breakout level, when they gap it up, remember, our signals we're looking for when the stochastics are in the oversold area. Pattern breakouts usually occur when your stochastics are up in the overbought area. So that keeps people from, or should keep people from saying, oh man, I don't want to buy the stock. It's already overbought. You do if you recognize the pattern. A gravestone doji on the E-mini NASDAQ 100 daily. Could be. I don't even know how to get that up here, but that doesn't really concern me. Right now, the NASDAQ is telling us there's no real selling going on in this one. So we recommended Micron because look what happened at the breakout level. There was your bobble breakout. There was your uptrend. And now this is why learning the kind of the simple rules that if you're that far away from the T line, you're in the overbought area, your safety stop is right there. Because logic says if there's enough selling pressure to bring you back down through the open of a candle that's that far away from the T line, where do you think the next target's going to be? Back here to the T line. Now look what we have to start our J-hook pattern. Let me make this bigger. There's our doji gap up. What is our doji gap up? That's your best friend. Now when I mention these type of signals and bobble breakouts, and again, there's your best friend, doji gap up, bobble breakout. If you know all these just very simple rules of what happened in human nature, it puts you in at the right time, it gets you out at the right time, it gets you back in at the right time. Now we're looking to see where the next target is. Where do we think the next target is going to be? Well, if this is a J-hook pattern, and that's wave 1, more than likely wave 3 is going to the 200-day moving average. Now, is that set in stone? No, that's just the likely probabilities. But what is our actual trading result or trading criteria? We stay long until we see a candlestick sell signal. That doesn't matter. Remember, a breakout of a pattern, like a bobble breakout, is usually going to occur when your stochastics are up toward the overbought area. A J-hook pattern, that's telling you that if you see a doji gap up, what can you already recognize? You can recognize the J-hook pattern setting up. Okay, so here's what we look for. We know that the kicker signal, this one was just such a perfect trade setup. There's our kicker signal. And where did it occur? Right here, the 50-day moving average breakout. And what type of pattern was it confirming? Your fry pan bottom. So this is the 2+2. The kicker signal breaking out through the 50. And then you could add 2 more to that. 2+2 is giving you a 4, knowing that giving you that much more information that you're heading in the right direction. You're probably going to see this one recommended tomorrow, Omar. A kicker signal. And where did the kicker signal kind of break out? Right through this level. Remember what a kicker signal represents. A dramatic change of investor sentiment, anticipating there's going to be more upside. We recommended GTN. Kind of your Morningstar signal. There's your doji sandwich. Broke out through this level. We were buying this one just because of the strength of, notice your, that's not even a doji, oh, it is a doji sandwich, I'm colorblind. But there's your bullish doji sandwich that broke out through this level, telling you there's a new dynamic. Stochastics and overbought give me second thoughts after a signal, especially my favorite kicker signal. Remember, the kicker signal is the strongest of all the candlestick signals. Now, this isn't a kicker signal. This is your best friend. Doji gap up. What do you expect after that? A 45 degree. So, Joel, if you haven't taken the 1-day training session on the top ranked signals and patterns, it's well worth your while. You're going to see about 18 different strong signals and patterns, and we're going to take them right down through the quantitative value, meaning number 1 is the best friend, followed by the left-right combo, right on down through the, oh, yeah, I forgot. Becky's reminding me. Tonight we've got a special going on that we're going to draw 3 names at random, and each winner will receive a signed copy of one of the books. And you'll just have to let Abe know which book you want. Why people want them signed, I don't know. I often tell people, if the book doesn't make you money, hopefully the signature someday will. All right, so let me finish. Yeah, I'll use my fake name. I forgot what it is. Oh, so what you're going to learn in this full day training is probably 18 different high probability patterns, starting from number 1 down to 18. That doesn't mean number 18 is bad. It just means it's still excessively good. But we're not trying to teach people all 18 patterns. We're trying to let people become familiar with all 18 of those patterns. But what we suggest is you learn 3, 4, 5 extremely well and become experts at those, knowing exactly when to get in, what to expect, how long to keep them, when to get out. If you do that with 3 or 4 signals or patterns that you become an expert at, you're still going to have each day more trades than you'll ever be able to handle, which puts you in a position where you put your you're able to go through and cultivate the ones you're looking at each day to see which ones are the best. But on ramp, you have to wait until the end of the trading day. But missing, yes. But if you see a doji gapping up, yeah, you can either be buying on this day or on the next day you can be buying. Gary, Becky will put in the link here before we're finished. Let me do this just in case I forget. This is a full day training. For non-members, it's $397. For members, it's $227. So there's a $170 discount there. But what our marketing people are suggesting is just become a member for $97, and then you get the 227. Plus, that gives you 30 days to see what all we do on our website. I put out 2 or 3 stock picks every day, not so that people have stock picks, but they can see the video or look at the chart and see what the rationale was for that being the top pick for the day. Now, that's only part of it. We also want to train people how to use their scans for whatever software they're using, because the scans are the process for you learning which signals and patterns you want to be trading the most, and you're going to find more trades than you'll need, and then you go through the cultivation process of which one you want to be trading, which constantly puts you in a situation where you're always looking for the best probability trades. Is this a repeat of something over 2 or 3 years? I don't understand what that question is, CB. How many positions do you have in your portfolio at any one time? Larry, I've got a very simple trading program. If I've got say a $500,000 account, I'm going to decide how many positions, which is usually around 10. So that means I'm going to have 10 $50,000 positions. Now, the reason I keep them all equal dollar amount is because every time I look at a trade or analyze the trades at the end of the night, I want to take a look and see whether that position, if I'm normally putting $50,000 in a trade and I decide, oh man, I'm going to put $120,000 in this one, you can bet your dime to donuts that you're going to spend 90% of your time watching that $120,000 trade instead of all of them equally. And so when I make my decision to get in or out of a trade, it's based upon one unit of my trading platform. And that's the money management that we'll go over on the weekend. Would TGA be an example of missing trades from closing over T-line and entering on an intraday pullback? Target. Of missing trades. Yes. Well, this doesn't look like a very good trade setup. We're good here on the left-right combo. Then you had the bearish engulfing that closed below the T line. If you got back in here, you got back out here. If you got back in on positive trading, you get ready to get back out. Now, after that amount of time, after being whipsawed in and out a couple of times, what's your conclusion of what direction this one's moving? Not moving very well. Move on to something else that looks more like this. Yes, if you've taken the top rank training in the past, yes, it's free to come back and do a refresher. Zuzu, that's something it'd be much easier. For those of you that aren't members, we also do, we've got training videos that obviously are a discount for members on all sorts of aspects, like how to scan for the best trades, how to, what your best entry and exit strategies are, setting stop losses, all that type of thing. Or usually about once a week, other than our Monday night sessions for members and Thursday nights for everybody, we'll do maybe a Wednesday night where we say, all right, we're going to do entry and exit strategies, how you improve your probabilities of being in a good trade using candlestick signals, or how to set your stop losses, or when to start looking to take profits, things that are attributable to the visual aspects of candlesticks. And the one thing that you'll always find about candlesticks is everything is just mere common sense. Every time I learned something or realized something, I said, yeah, I knew that. I just never saw it in a visual capability. Oh, I'm kind of gabbing here, aren't I? Let's get a move on. These are again, look at the doji gap up. Did we do this one, GTN? What we like to do is get caught in these type of trades. Look at your kicker signal. And what's your criteria for holding this one? You stay long until you see a sell signal and a close below the T line. This takes the anxiety out of seeing a sell signal, thinking, maybe I should take profits here. If it doesn't confirm with the T line, you stay long. So where I used to get out of a trade thinking, all right, I'll get back in, but I never do because I've moved my money someplace else. Now I can sleep comfortably by just holding a position as long as it stays above the T line. IQ is another one. Look at the bobble breakout right here. It closed below the T line right here. Now this one would have probably been a good place where with a doji, then they gap it down, you close out the position. But then you're buying it right back after the piercing signal, coming back up, doing kind of a J-hook pattern. So the aspect of the T line tells you when to get out of a position and when to get back into a position. GRTK, kind of re-recommending this one. We've been long on this one, but you can see what type of pattern. We got the classic fry pan bottom J-hook pattern in progress. I'm going to try to run through some of these real quick because we got a bunch. Again, there's your classic fry pan bottom. There's your bobble breakout. There's your J-hook pattern. This is why you want to still be buying this one, because if this is wave 1, wave 3 is still in progress. MRTX. Wave 1, wave 2, scoop pattern. If you're buying right here, what's your criteria? You just stay long until you see a close below the T line. This is not rocket science. This is just taking some very simple rules about how human nature works the same way time after time. If I've got 10 positions on and 4 of them or 5 of them are steady eddies above the T line, I don't have to do any analysis other than stay long until you see a sell signal and a close below the T line. Fry pan bottom, yes, remember, on a fry pan bottom, when it breaks out, more than likely your stochastics are already in the overbought condition. So look at the J-hook pattern right here. Look at your morning star that occurred right on the T line. So if you'd been long here, and you saw this move, and the next day you had a bearish harami, you could take profits because where do you think it was heading to? Back to the T line. When could you buy back in? Well, you might have bought back in right here, which was slightly above here, but at least you weren't holding on to something that might be doing this. You got out when it was time to get out, and you got back in when it was time to get back in. Let's see. G R P K. No. What was it? G P R K. No, you're probably not too late to get in. Let's take a look at the bigger picture. You're just starting out of your J-hook pattern. Where's your next likely target? We're probably at least testing this level up here. Now, is this the best trade? It's a good trade. And if you're long, you stay long. Wouldn't necessarily think about going long when you've got other charts that look like this, where you've got a kicker signal just starting, and your upside potential may be another 30% to the upside because the signal has just occurred. Let's get rid of this. Let's see, did I do SE? Let's see. Another one where you did the bobble breakout and you just stay long. No, you did this because of the morning star signal. You just stay long as it stays above the T line. Let's take a look at the big ones. JNUG doing a left-right combo right here off the 200. That might tell you that things are starting to get a little bit perkier, I guess. And looks like gold is trying to start back up. You can see gold's been in an uptrend, and there is a trend channel. So if it starts trading up, it's probably heading for the top of the trend channel, which means your gold stocks might be ready to be bought again. What we're looking for is things that are giving us 2+2. Look where Netflix closed today, right smack dab on this resistance level with kind of a wedge formation. So what's this tell us? Even though our stochastics are up here, if they open positive tomorrow, what do we got a prospect of? Wave 1, wave 2, going into wave 3. Once again, it's not only telling you that the probabilities are that you're heading higher, but it's giving you something that's telling you the magnitude of that move is going to be fairly substantial. How did I do this? Okay. Again, a J-hook type pattern on Roku. Look at your kind of your bobble breakout. If this is wave 1, look for wave 3 to probably come up here and fill this gap. Again, just putting you in situations where you've got a much greater probability that things are moving in the right direction. Labu, you might not trade Labu, but it's also telling you that the biotechs are acting strong. So instead of buying Labu, which kind of has a steady uptrend, you can go and find maybe a biotech stock in that sector that's got a very good chart pattern to it. And NVIDIA. Also, let me make this bigger so we can see it. You can see what's happened here on NVIDIA. You use the 50 as a support. Doji gap up. If they trade this positive, probably got a wave 1, wave 2, going into wave 3. What exactly is 2+2? 2+2 is just merely saying, all right, if we can see a good buy signal and we can see other reasons to be buying, like support and a pattern, we're just adding more criteria to our analysis over and above our, are they, where are they trading now? Let me take a gander at. Oops, I guess, yes, it looks like NVIDIA is trading up here at 162. Yes, and that you're adding a lot of parts together to improve the probabilities of just that signal. Now, if you can look at chart patterns and say, I don't really know where it's going, like an Apple, you don't trade Apple. Amazon, you can't really tell which way Amazon's going. Go on to something else. Tesla, another one that doesn't really have any great activity going. So there's going to be times when a chart looks good or strong downside, and there's going to be times when it doesn't look good, you move on to something else. There's 10,000 trading entities out there, and simple scanning techniques using the candlestick signals will find you the best trades in less than 20 minutes. Even if you don't know what you're doing yet, you're going to find the best trades in less than 20 minutes each day. Now look at the slow curve on EL or EOLS. Slow curve, scoop pattern, big price move, then notice where the consolidation occurred. Right back to the T line and the bull stepping in. If this is wave one, wave three could be the same magnitude. Now, why is that? Because there's a lot of strength here. Then there's profit taking. That doesn't diminish the fact that there was a lot of strength here. Probably that strength is going to continue. So one of the patterns that is very identifiable is what we call the McMuffin. That's a Morningstar signal followed by a doji sandwich. We know the Morningstar signal is one of the 12 major signals, and the expected result is more upside. We know the doji sandwich is a very simple signal. Big candle, doji, big candle with a doji sandwiched in between, implying there's more upside. Well, it didn't work today. However, you don't give up because this was the signal. You get ready to buy this one on positive trading. That was the same scenario we saw in SFIX. There's your Morningstar signal, smack dab off the 50, a close above the T line, followed by a doji sandwich. It opened lower today. Should that have been time to get out? No, you use this information to say, just hang in there. More than likely, the results based upon these signals are going to kind of confer or confirm. Is there a target available for the doji sandwich? No, it's just a simple result. There's usually going to be more upside. Now, the reason I say hang on to this, there was an old movie. I don't know whether it was the Guns of Navarone or something, but it was a group of special agents during World War II where they had to blow up a dam in the German, they were blowing up the dam, I think, so that it would knock out a bridge to stop the Germans from moving across that gorge or that valley. And so the engineer, they snuck into the dam, they placed all the dynamite, and no, that was the Bridge over River Kwai. That was on last night. But this was something along the same lines as the Guns of Navarone, but it was the same guys in that movie. So they set all the charges of dynamite in this dam. There's Force 10 from Navarone. All right, thank you. And so as they were escaping, a couple of them were on one side of the gorge and the other couple guys were on the other side, so they were split up. And they could hear the explosion go off inside the dam. And they sat there and nothing happened. And the one guy that was with the engineer just kind of said, what happened? This didn't work, blah, blah, blah. And the engineer was laying there and said, just wait. And sure enough, the pressure of the water behind the dam after the explosion, weakened things enough that you could see it slowly start leaking, and then pretty soon the whole dam crumbled. And this is what I kind of put as a, yeah, you got to give it time. So that's exactly what I kind of, when I see these signals, just give it time, because this was the information that changed the direction of that trade. So kind of the same scenario with CASA. There's your Morningstar signal. There's your doji sandwich. Except look what happened today. It opened here and closed here. So now you have a Morningstar signal followed by a doji sandwich, your McMuffin, followed by kind of a belt hold signal. You definitely want to be buying this one on positive trading tomorrow. PetQ was before SFIX. So notice TXMD, kind of your Morningstar signal, doji sandwich, and what's your 2 plus 2? You got it. It took you up through the resistance level, creating a J-hook pattern. No, it wasn't Elvis Presley. GH, Morningstar signal, kind of a doji sandwich, led you into the big breakout. FI, Morningstar signal, doji sandwich, that kind of broke you through this resistance level. What do you expect from here? More upside. So again, once you kind of Anthony Quinn, I think, was in that one. Yeah. Robert Shaw was in it. Yeah, I can't remember the rest of them. I'll have to watch it again sometime. So the more you recognize these signals and patterns, the more you're going to put yourself into situations where the probabilities are greatly in your favor. ETM, you can see the scoop pattern. And how did the scoop pattern start? Your Morningstar signal, doji sandwich, now a doji. So now what do we have? If this opens positive, we got another doji sandwich. And where is this doji sandwich occurring? Right at the breakout level of not only the 200, but also kind of the handle of this scoop pattern. So if it opens positive, you can be buying immediately. You don't have to wait for confirmation, because we know what the expectation should be. Just a simple doji rule is prices are usually going to move in the direction of how they open after doji. Oops. Oh, Becky, I'm sorry. Okay. 30-second break. I am just scrolling up and down, and I'm hitting a name. And the name is Chuck M. Chuck M, if you will email Abraham at Candlestick Forum, you can request any one of the 3 books. Okay. CC Writer. Venda. There's your doji gap up. Order to close right here at the T line. If it opens positive tomorrow, where's your next likely target? Well, once they get through here, they're probably going to fill the gap up here around the 34. All right, I've got pick paddle stock. All right. PTI. Look at your fry pan bottom breakout. Right here. What's that kind of lead to? The expectation of more upside. Now, the crude oil prices, as you can see, have been moving up. They're right now they're at 55.12. You can see where It kind of bottomed out just recently right here on a hammered doji, followed by a left-right combo. So your crude oil prices are heading up, which means you want to start watching that sector. Whiting, for example, or bass. Make this a little bit bigger. Look for a breakout. PDCE. Look at your doji gap up, kind of a scoop pattern. Wave 3 in progress. So knowing that each time that we see a signal, look where this bullish engulfing occurred on FTSI. Right smack dab on the 50. What do we know about breaking a resistance level to come back and see if it's going to act as support? If it acts as support, we know we can be buying because that tells you the bulls are still in control. The uptrend is going to remain in progress. Yeah, I will do another pick here in a minute. We just want everybody to sit on the edges of their seats. V-cell looks like it finally broke out. JB keeps asking about V-cell every day, but it looks like now you got a fry pan bottom breakout. DBVT. Now this one looks interesting because look what you got going on right here. Doji gap up, your best friend. Where do you think your first likely target is going to be? Up here at the 50. Let's get rid of this thing. Where's your next target? There's a big gap area up here. So this becomes intriguing because you've got a best friend gap up. And if it breaks through here, look at the percentage moves you could have, almost up to 100% upside. Any rule of thumb on volume, especially on the lower dollar amount stocks? Glenn, first of all, I don't even pay attention to volume on a stock, again, that's trading less than 200,000 shares on average on a daily basis. So that eliminates those. Now, the other part of it is a lot of people will say, well, I want to see the volume go up as the price goes up. Volume and price have absolutely nothing to do with each other. If you're buying a stock and nobody's willing to sell it, that's going to go up on low volume or lower volume. On the other hand, this one isn't a good example. We do have volume here. SEMG, nice little scoop pattern with a left-right combo. Remember, the left-right combo is going to be one of your strongest reversal signals. Now you have a doji sandwich following that. And where did the doji sandwich occur? Right here at the 50 and the T-line breaking through. Also breaking through this downtrending channel. What do we got the perspective of? Wave 1, wave 2, wave 3 up here somewhere. JT, J-hook pattern. Let's see. Crone. Starting a J-hook pattern. Look at your kind of your doji, left-right combo started your uptrend. Where was it time to take profits on this chart? Look how far away you were up here compared to the T-line. So what did that tell you to do when it was trading way up here? To flip to your 10-minute chart and see when the 10-minute chart started coming back down below the T-line. That's when you take your profits. MYOK, left-right combo, gap up. Breaking this downtrending channel as well as the T-line. You can buy this one on positive trading. So USFD, look at your belt hold. And what does a belt hold do? It takes out a lot of the sellers. which means there's less sellers in the way. You can still be buying this one, even though you're in the overbought area. The fact that they did a belt hold took out a lot of sellers, meaning any buying is going to run into less sellers, means the trajectory is going to be that much greater to the upside. Big belt hold on CWEN. If this opens positive, what does this become? A huge reversal signal. Now, a belt hold can be a belt hold signal, or it can be a belt hold piercing signal, or it can be a belt hold bullish engulfing. The belt hold merely represents the fact that they gapped it way out of the trading range and the bulls took over and brought it back up. That means the bulls are now in control. IQ had that same scenario, kind of a piercing signal, belt hold, starting your J-hook pattern. ELP, there's your belt hold, left-right combo. What's that imply? That your uptrend is going to be back in progress. Cray, belt hold type signal, kind of a upward trajectory. You can be, if you like trading this one, you can have a much better prospect of buying this on positive trading because of that belt hold. And Shopify, another belt hold. So where do you want to be buying this one? Probably if it comes back up through this level, that's telling you that trajectory is going to start acting pretty strong. Yes, a big belt hold here, but it hasn't confirmed yet. What do you want to see after a belt hold? That the bulls are taking control. Now, they haven't. There's a left-right combo. So what do you got setting up? A belt hold signal. A few days later, a left-right combo. If it starts trading positive, that's telling you this is all taking effect at that point. A belt hold is you're in an uptrend. Here's your trend. They open it way down here, way out of the trading range, and they bring it back into the trading range. This is explained by the Japanese rice traders saying you got two sumo wrestlers fighting. One's trying to back out of the ring. The other one grabs his belt, pulls them back in. They're back to fighting again. Let's see, EXPI. So when we're looking for a pattern like this, remember, if one doji means indecision, especially in the oversold area, a series of dojis means greater indecision. Now you've got a left-right combo that closed above the T-line. Remember, after that length of indecision, usually the decision is going to be fairly strong. Would you still be watching? If I'm liking a stock because of the belt hold, I've probably got it on my bucket list, which is my watch list 6. And each day, when I update the charts on that watch list, it's still there. If it starts doing something, yes, because of this, if I put it on my watch list, it's still going to be there. Now, after a week and a half, if it hasn't done anything, if it looks something like this or something like this, yeah, I get rid of it. Strong resistance at the 200. That makes this likely target back to the 200. But the fact that they did a belt hold tells us this is where the bulls are probably taking control. Now, remember, everything, the most important criteria is the signal itself. Everything else is just something to watch for. But the signal itself is what the Japanese rice traders make the important aspect. Let's see, what was I looking at? Okay, back here. Series of dojis, bullish engulfing, tells you something new has happened with a high probability. Doji on PCRX. Bullish confirmation. Look where these dojis occurred. Right smack dab on the support level before. If you're buying this one, obviously you're watching to see what happens here at the moving averages. What is that? Oh, whose handwriting is this? Kind of flat trading, bullish engulfing. Get ready to buy this one. Expecting to come back up at least to test the 50-day moving average. All right, so here is your number one signal. Doji gap up. A lot of people say, well, shoot, I don't want to be buying a stock that's already up 15, 20%. You do if it's based upon this signal, because what's our expectation? The best friend tells us there's going to be more upside, usually a 45-degree. Hold on to your individual ones, guys, until I get done. I'm not almost done. When I tell Jim to do the double line, then put in your gaps are filled eventually. They may not be filled this week, this month, or this year. Oh, on the last one, what was the last one? If I see a doji gap up, where's our logical spot that we wouldn't want to see it trade? Well, if our expectation is it's going this way, it shouldn't come back below this level. That tells you the bulls aren't there. You don't necessarily need to see a pullback. All you really want to see is that it doesn't come back below this level. Maybe there's some congestion or consolidation, but the expectation should be the fact that it did a best friend signal implies there's going to be more upside. Marathon, look at the scoop type pattern, little best friend breakout. Zebra, look at your doji best friend, doji sandwich best friend breakout through pretty much an observable resistance level. Tells you wave 1, wave 2, going into wave 3. That could be, Gary, but we don't care why they're up. Okay, got to pick another winner. All right, hold on. Let me scroll. I'm just scrolling. Up and down, and then I'm hitting one. Ow, come on. Greg R. Greg R. You get to email Abraham and pick a book. Okay, ADMS, kind of a fry pan bottom, inverted hammer, breakout. You can be buying this one. How do you scan through all these stocks and find these setups? Very simple process. If I'm going through, let's say I scanned this one today because of the big percent price move. Well, the big percent price move now identified that this came out of a fry pan bottom. Or if I found it here, and that's not a good place, found it here for some reason, it's on my watch list. Now, I might have in bucket 6, I might have 60, 70 stocks, and each day, there you go, Greg, all right. Each day, I'll update everything, and that brings the best ones out of those watch lists up to the top. There's a big left-right combo. Makes this very simple. If it opens above the 200-day moving average, more than likely in wave 3. AAN, big left-right combo. This tells you there's been a drastic change. Lost audio. Which scanner do you use? I use Metastock. I use TC2000. They're both reasonably priced. Why did that not work? Well, Shazam. WTTR has a good chart, but it won't come up for some reason. There's your J-hook pattern on QTNT. Look at your left-right combo starting your next move. What do you expect out of this move? Same criteria, same magnitude move as this. So remember, the J-hook pattern is one of the patterns everybody should learn. This should tell you. AAN. This should tell you. This should tell you there's more upside. Is there a button that David could click to get his audio back? Bloom, there's your best friend signal. If this breaks through the 50, this strength of the signal, kind of a double bottom. Crocs, there I know for the, he's telling you to sell. This one's doing a bullish engulfing and left-right combo. I'd be ready to buy this one. There was a time when Jim Cramer came out with a recommendation. There was websites to do exactly opposite what he did. So there's that big left-right combo. This is what you expect afterwards. That type of price move. So there's that big left-right combo. Didn't confirm. However, if it comes back up through the 50, you've got a left-right combo, and finally the confirmation, that's when you start buying. So now here's also another aspect. If you were buying right here because of this signal, and it came back down through the open, that's where you set your stop. Because logic says if they come back down through there, what's happening? They aren't trading up, and they're coming back down below the breakout level. You close it right out. And did I hope I didn't. Tell. Bullish Harami, J-hook pattern. Again, notice where your bobble breakout occurred. Notice where your sell signal was. A shooting star that started trading lower. That's where you took your profits. Because where did you think your first target was going to be? Back here. Okay, let's see. TNDM. Left-right combo. This is the 2+2. Look at where your left-right combo occurred. Right here on the 34. Bullish confirmation. Breaking out. That added all together. You got a scoop pattern. You're breaking out through this level. That's when you want to start buying wave 3. Somebody pointed out OII. Look where your left-right combo occurred on this one. Right smack dab off the 50. Remember what the signals tell us. They tell us exactly what the investor sentiment is doing. Right at a major level that everybody else is watching. We just happen to have the benefit of seeing what's going on right at those levels. A left-right combo. What did it tell us about this indecisive trading here? That now they're not indecisive anymore. Oh, Mo, you're not leaving. You might get a book. Guess we got one more to pick here in a little bit. I'll even draw a little heart in it. And there's your kind of your bobble breakout again on CRUS. Get ready to buy this one. They're a little left-right combo. So just the fact that you can identify a signal, a pattern, anytime you see the slow curve breakout, that's going to put you in situations that put you in much better probabilities of being in the big trades. Oh man, I don't know what that one is. Slow curve breakout rider. Okay, so what we're really looking for are the strong signals. Anytime we see, number one, if I'm trading 4 different signals, it might be the best friend, it might be the left-right combo, the kicker signal, and let's say a fry pan bottom breakout or a J-hook pattern breakout. So if I specialize in those 4 or 5, oh, Robin, I don't remember the book winners. Let's see. Greg R. was 1. I forget the first one. Chuck M. All right. So the kicker signal is a very strong signal. So if I'm going to put the probabilities of being in the right place at the right time in my favor, not only in the right place at the right time, but in situations where the strength of that move is going to be a lot stronger, that's what the signals basically show us. So with that, I guess, Becky, put in the link for the March 2nd training. Again, if you become a member for 30 days, you save money. Micron, look at your best friend's signal, telling you that if this is wave 1, look how wave 1 started. A bobble breakout with your best friend's signal. Now you've got a doji, gap up, J-hook pattern, best friend signal, making that your logical target. Okay, one more pick, and then I'll let Jim do the double, or Rick to do the double line. I'm going to even close my eyes and then click on somebody. Is there a Jerome Hassenlager? Okay, then, all right. Jerome Hassenjagger. All right. Email Abraham. Request a book. That's like who sits next to your pool on St. Patrick's Day? Patty O'Furniture. Okay, Rick, go ahead and do the double line. And in 2.8 seconds, do another double line. All right, we'll try to get through these real fast because I know a lot of you got plenty of candy. There's your best friend. Be ready to buy this one on positive trading tomorrow with the anticipation that your 200-day moving average is your next likely target. Oops. AZN, kicker type signal. Be ready to buy this one on a 45-degree positive trading. ICAD. Nothing wildly exciting. You can be buying this one. Just make sure your volume is good. You can be buying this one, though, if you like it, especially if it breaks. If I was buying this one, I would want to make sure it gets up through today's high, telling me that they broke out. Merck, just stay long, steady Eddie, as long as this stays above the T line. On, oh, I did that wrong. On, stay long as this stays above the T line. Corning, this one's getting a little bit toppy. There was your hanging man yesterday, lower open. You can stay long. It's not a very vibrant 45 degree, but you can stay long as it stays above the T line. I never trade the E-minis off of here. I don't know whether I can get them over here or not. ESAH9, ESAJ9, nah, ESAG9. Nah, for some reason I can't get them over here on this charting service. NAC. You can see how it's consolidated after the kind of the fry pan bottom. If I was going to be a buyer, make sure your volume is hefty. It looks like it is. I'd be a buyer if it came back up through today's high. McDonald's. Left-right combo. If you like trading this one, you can be buying this one on positive trading tomorrow. Just don't let it, don't let it trade back below the T line. VKTX. Notice how it's used the 50 as support after it came up through. You can still be a buyer of this one on positive trading, anticipating your next target should be the 200-day moving average. PA, kind of a fry pan bottom. Again, there's your left-right combo Morningstar type signal. I'd be a buyer of this one on positive trading. Just don't let it close then back below the 200. Devon, there's your bullish engulfing doji sandwich. You can buy this one, especially if it comes up through there. Kind of a scoop pattern setup. Dominoes. This one, if you're long, it has to open positive. If it opens lower tomorrow, after a bearish engulfing signal in the overbought area, you can start going short. There's a gap right back down here at the 50. That could be your next target. CYBR, look for a 45 degree off this kicker type breakout. T-Mobile, not going to make a whole lot of money. You're pretty much right here at a resistance level. You can be buying this one on positive trading. Just, I'd be looking at this more as an option trade because of the lack of volatility in it. And INSEE, stay long. Notice your bobble breakout. You just stay long as it stays above the T line. Lynette, stay long on your bobble breakout. Don't let it close back below the 200. I think we did IVC. Yep, look for a 45-degree, TGII. Get ready to buy this one on positive trading. If it opens positive, you can start buying and then just set your stop at the T line. It shouldn't come back below that level. Which one is this one? FL, Foot Locker. Stay long. Kind of left-right combo right here at the breakout. You can be buying this one on positive trading, anticipating wave 1, wave 2, going into wave 3. And IPG. Are those flutter kickers? Kind of. Not purely, but it gives you the same illustration. Opened here, gapped up, bullish engulfing. I'd definitely be a buyer on this bobble breakout. I'd be more apt to, yeah, it's good, strong signal. I'd be buying on the bobble breakout. Square came back up today. Notice your left-right combo at the end of this flat trading, but indecisive trading to the upside. So this one still has to open positive and trade positive to stay long. Tesla, you're more apt to want to go short on weakness. It's got a downtrend to it. So if this opened lower tomorrow, you could be shorting it. KGC, nothing here yet. That's not a great chart. Now KL, that's got a J-hook pattern setting up. So that's a better gold stock to be going after. CGC, get ready to buy this one on positive trading. And ACB, nothing here yet. And New Beverage, nothing there yet. Crone has a little bit better trajectory for one of the weed stocks. OII, you can get ready to buy this one after the left-right combo and kind of the double doji sandwich. Bullish engulfing, kind of double doji sandwich right here at kind of the breakout. You can buy this one on positive trading. Notice how it's supported here at the 50. Did buy signals. Where do you think your next target's going to be? Probably up here at the 200-day moving average. Sale, all you can do is stay long. Your safety stop should be at the T line. It shouldn't come back down through that level. ADN, that's not it. ADM, nothing there yet. RDFN, you're still in a wedge. I'd be more apt to buy it if it broke out through the top of this this wedge. But then you'd have to watch to see what it does at the 200-day moving average. United Health. This one you can be buying. Just want to make sure it gets up through this level. Not a great chart, but it's heading in the right direction. What is that? YIM? That doesn't seem to be working. Facebook. Yeah, you could be shorting Facebook. Notice that you're trading below the T line. They could bring it back down to fill the gap. So if you're shorting this one, you don't want to see it come back up above the T line. Semiconductors, all you can do is stay long. Notice the gap up through the 200 bobble breakout. Stay long on this one. AGN. It has to open positive tomorrow to stay in it. If it opens lower, I'd close it out and wait for the next buy signal. That's a little scoop pattern on ECA. I'd be a buyer of this one on positive trading. Also wanting to see it break out through that level. Melly, nothing. Probably wouldn't be long or short on this one. Just no direction to it right now. Which means if you can't detect a direction, close it out. There's plenty of other opportunities. Trade desk, if you stayed long, especially after the bullish engulfing J-hook pattern, definitely want to see it get through this level. I think we did IVC. Yep, look for a 45 degree. Philip Morris needs to get up through the 50. ConAgra needs to get up through the 50. Use the T-line as your stop. The biotechs, Biogen, you can stay long on this one. Just don't let it close back below the T-line at this point. Tweezer bottom, JJ, don't know which one you're referring to. DBI, short, no. We look at the same chart. QTT has to open positive. You can see how the slow curve broke it out, J-hook pattern, pullback. So now you have a doji right on the T-line. It has to open positive and trade positive tomorrow. OTLK, just stay long. Just make sure your volume is hefty. I would probably put a sell stop right here. If it came back down through that level, it was coming back into the non-breakout. D fast D, I don't know. This is, yeah, these are real-time charts. This is CQG. They're just 15-minute delayed, which doesn't mean anything because the market is closed. So they're delayed for stocks. I use these charts more for trading commodities. I use some of the other charts for trading stocks. Let's see. You've given us about 40 stocks to buy tomorrow if they open and trade positive. But that's a view that might be too wide to process. How do we narrow down the top 10 on focus and on assuming that we've been to the workshops on this subject already? Narrow it down to what you can see as being the best trade setups, whether it's J-hook patterns, whether it's kicker signals. Pick out 3 or 4 and become good at those. That way you're only concentrating on those and you know exactly what should be happening on how they should open, how they should maintain their uptrend, and when to get ready to sell. So now instead of having 40, let's say you picked out 6 that you could recognize that you're concentrating on. Well, now you look at those 6 and you can pretty easily say, all right, which ones have a better 2+2? Which ones are bouncing up off a 50-day moving average? Which ones are breaking out? Which ones have the strongest signals? AMD, still nothing there, but you do have a left-right combo. Get ready to start buying this one on positive trading. Tuesday morning. Whoops, Tuesday. Nothing here. Notice how every time they try to take it up, the sellers knock it back down. If I was long, I'd get ready to close this out if it opened lower. If I was looking to buy, I'd probably buy it above the high, telling me they've broken out of this stage. Stan, I don't know what that is doing. for what that symbol is. Now, well. Oh, there you go. Now you just stay long as this 45 degree stays intact. Palo, stay long as it stays above the T line. And trade desk, if you're long, you stay long. If you're looking to buy, you wait for it to break out through that resistance level. Stan, I don't know why you want to do a short on this one. There's nothing here. If you were short, you should have been out of the short. Now you're looking to go long with it coming back up above the T line. Facebook, get ready to go short on weakness. United Technologies opened lower, but came back up. So as long as you stay above the T line, you stay with this one. CGC needs to open positive tomorrow. ADNT also needs to open positive to continue the uptrend. AMRN, nothing there. You're caught sideways. I'd be more apt to buy it. If it broke through this level, I'd rather pay 18.25 knowing it broke out to the upside. YIM is a typo, all right. Stan, I don't know why you want to go short on BBI. Coca-Cola. Whoops, missed, I guess. It's a hard one to trade in the first place because of being an institutional trader, it's just not very exciting. Now, you might look at shorting this one because of the force of this move to the downside and trading below the 200. So, having lived in Atlanta for 8 years, I knew that Coca-Cola formula was sold to a pharmacist for $50. And that included the black pot and the wooden stirrer that went along with it. AP, nothing. No direction. Let's see, we did this one. ARMN. Nah, I'd be someplace else. On Omar, well, Omar we've already seen is a very strong signal. With the anticipation, there should be more upside. So you definitely would not want to see it trade back below the open. If it did that, it's nothing's happened. I used to trade the SPY and the E-minis in my younger days. Right now, I trade mostly stocks or crude oil, cattle, things that move around a little bit slower. Nothing here on TLRY. And Vitamin Shoppy. You stay long, but if it opened lower tomorrow, it's probably coming back to test the 50 one more time. You want to see this open positive. VIPs you should be out of with that close below the T line. You could possibly even be short. Now, how far could it go? Could it go here? Could go here? But this is where you kind of put your Fibonacci retracement numbers on. It also gives you maybe this level or this level or this level. So not that it's going to go there, it just gives you more insight as to which, where, if you see a buy signal, where is it occurring? Nally must have, did they pay a dividend? You can see the bearish signal. More than likely, they're coming back to test the 50, unless they paid a dividend. They usually pay a good hefty dividend. And GE, just to me, is just not a one you want to trade. If you're long, you can stay long as it stays above the T line. DBVT. Same scenario here. I wouldn't want to see it trade back below the open of today. The implication is, with a doji gap up, it should be going in this direction, not back in this direction. Yes. Intelsat, flat. Wouldn't be long or short. Amazon is not a good chart to trade right now. No direction. MD. You can buy this one if it opens positive tomorrow. Just don't let it close back below the T line. The Qs, all you can do is stay long as it stays above the T line. Okay, everybody, sorry to keep you here so long on St. Valentine's evening. Do you always place your orders above the asking price in the morning? Not necessarily, but what I want to see is, let's say I was going to buy Omar tomorrow. I wouldn't want to see it open here. I'd want to see it trading up here. So if it closed today at 1435, maybe I put my buy stop at 1442, knowing that if it was heading in that direction, it was confirming that signal. Okay, everybody, have a good Valentine's Day. What's left of it. Remember, if you want a book, thank you, Gary. I love flowers. Trying to think of a flower joke. I can, but I don't want to say them here. So with that, everybody have a good evening. We will see you bright and early in the morning. Remember, tomorrow I'm going to be traveling, so I may be in the book. JD, did you win a book? Tom, this will be recorded. All right, everybody, see you bright and early in the morning. Yes, if you want flashcards, just go to our products and services in the members area. That's where you get them at a discount. All right, see you in the